everyone. Welcome to the latest Carson's Take 5. Ryan and Sonu here. Sonu, this week's title is GDP is Negative? Should you sell in May? That's the big question. We're going to talk about GDP. That's gross domestic product, how our economy is doing, slowed down in a big way. But part two of that, you might have heard this one, sell in May and go away. The worst 6 months historically for the stock market are May through Halloween, those 6 months, which if my calendar is right, it is May, the time everyone's listening to this. Let's start with, I guess, the economy being weak in the first quarter. That's a little weaker than expected. I believe it was negative 0.3%.
0.3%, negative 0.3%, the first negative print in 3 years.
And 22, last time things weren't that great. So what'd you find when you dug in there?
This is not entirely surprising, as you said. I mean, we've gotten data that goes into GDP for about 3 months now.
Okay.
Right? So, and this gets to the point about, when you and I in this business, when we think about, is there a recession? Is there not a recession? We don't really have to wait for the GDP data, which comes out a month after the quarter.
It's late.
Plus that. It's late, right? But still, that's what everyone looks at. That's what all the papers are going to be talking about. Negative 0.3%. That was, if you think about GDP, there are two big pieces to it. One is how much are people spending, and people meaning households, businesses, and the government, federal government, and also state and local governments. Then the other piece is we have two things called net exports minus imports, and we have inventories. Now, what happened, because in anticipation of the trade war, a lot of companies imported a lot of stuff and built up inventories. That really skewed GDP growth. So
if you buy stuff early, it takes a number lower. Easiest way to put it?
And especially when you buy stuff early from abroad. Because GDP is gross domestic product. How much are we producing domestically and buying, what's domestic production, right? That's what it is. Stuff that's made in China doesn't really count. If I buy a toy from China, it doesn't count, right? Okay. Or if I'm a retailer, I'm building up inventories for that. It doesn't count. So that's why without that, right, if you exclude the volatile piece of GDP, which is inventories and net exports. So if you just take household consumption, business investment, government spending, that grew what we call real final demand, real because it's adjusted for inflation. That grew about 2.3%. And if you exclude government, because actually what was interesting, state and local government spending pulled back a bit.
Yep.
But federal spending pulled back, and this was surprising to me. It was because of defense. It was not non-defense, right? Defense spending pulled back about 8%. But if you exclude government, private investment plus household consumption was up about 3%. So it wasn't bad. What this number actually, the guts of the report tells you, the economy is kind of doing okay before these tariffs hit. Now, the question is what happens post-Liberation Day? We don't know yet. I think there's a lot of uncertainty. But the economy was okay. It's slowing down, certainly.
Yep.
It slowed down from what we saw in 2023, what we saw in 2024. But, we weren't in a recession. I think that's clear. We weren't in a recession as of March. Honestly, I don't think we're in a recession today either. Yep. But that's, a story for whenever the data comes out over the next month, 2 months. But at the end of the day, look, GDP growth ultimately is made up of consumption. 70% of GDP growth is consumption. Consumption has slowed a little bit. It grew about 1.8% last quarter. Historically, at least over the last 2 years, it's been closer to, let's say, 3% or something like that, right? Now, a big reason for consumption slowing was a lot of people didn't buy cars in January and February. The weather was bad, things like that. They did buy a lot of cars in March, but it wasn't enough to offset that. So there was a big drag over there. But still, there's a slowdown, but it wasn't a recession. The economy wasn't falling off a cliff.
So when everyone sees the headlines of the worst GDP print in 3 years, we shouldn't get too worried because when you peel back that onion, the consumer is still spending. There's still some business investment going on, and the government is doing whatever it does. But consumers are still fairly strong. Also, I've looked the last, really since 2010, since the GFC. First quarter has kind of been weak. And listen, you could talk to 10 economists, get 10 answers. I guess I just know, and first quarter tends to be a little on the weak side. Maybe it's some quirks, maybe it's calendar stuff, whatever it is. But then the economy gets a little better later in the year. Hey, history doesn't repeat itself. It often rhymes, Mark Twain. Maybe we can see that again with some good news on the trade front. But we've got a couple minutes, so now I'm going to talk about everybody's favorite investment axiom: sell in May, go away. Yes, these next 6 months, if you break down all the possible scenarios, these next 6 months are like the worst 6 months. The S&P's up on average 1.8%. I'll say it again. It's up. Okay, it is up 1.8%. So it's positive, but that is still pretty weak. I mean, now November through April, that's usually the best 6 months. Here's some things to think about here. No, we would not blindly ever say just to sell and go away because of the calendar. It's something we pay attention to. It's out there, but here's just something for everybody. Had you sold and gone away last year, you would have missed a 13% rally. Okay, 13% rally in sell and May, go away those 6 months last year. 8 of the last 10 years, these worst 6 months have been higher. And let's say you want to look at the month of May. The month of May for the S&P is higher 9 of the last 10 years. So maybe we should call it sell in June and go away. I don't know. So we'll just leave it with this. Yeah, we'll leave it with this. Don't sell in May and go away. Be aware of what's happening. We know the news. This is a very news-driven market. I mean, one tweet here, one White House meeting there can really move things up or down, and that's going to matter a lot more than what the calendar does. But all in all, we just had a near bear market, a lot of worry. Now, some of that worry is being alleviated a little bit on the trade front, and that's kind of why we've had the rally we've had. But listen, we're far from out of the woods yet. The economy is slowing. Like you just said there, Sonu, but I don't think you should sell and May, go away. I think we'll probably have when all is said and done 6 months from now, probably have a decent up move. It might be tough getting there, but I'm optimistic by nature. Any final comments, Sonu, on GDP, sell in May, or any summer vacations? I don't know. It's like, it's summertime almost.
Yeah. It's spring here in Chicago, so which means allergy season is in full bloom, literally full bloom, and that's why I'm wearing glasses, because I can't wear my contacts. Bothering. No, I think because there's a lot of uncertainty, and when you have uncertainty, we do this for our client portfolios as well. We like well diversified portfolios, and this is the time when diversification actually becomes important, right? It's not a time it's not a time to put all your eggs into one particular area of the market, whatever it is, right? Maybe that worked over the last 2 years, maybe that worked over the last decade, but now is the time for diversification because there is a lot of uncertainty.
I think it was John Rockefeller said, "Put all your eggs in one basket and watch that basket very, very closely." I like that one, but don't do that. Don't do that. But like you said, I mean, literally the time we're doing this, Germany's at an all-time high, or really, really close to it. It's hard to think there's this global calamity coming when one of the most influential stock markets in the world is hitting an all-time high. We think maybe the U.S., which is down here, Europe's up here, and a lot of other places up here. Maybe the U.S. plays catch up the rest of this year, which would be a great thing for obviously a lot of these listeners, a lot of our listeners. So listen, thank you everyone for being here on the latest Carson's Take 5. We'll see everybody next week. Take care. Thank you.